Good morning, viewers, and welcome to the Economy and Politics Show, where we discuss policies, investments, and political economic activities in Nigeria. It is Thursday, June 11, 2020, and we'll be focusing today on the oil and gas sector, which remains Nigeria's major revenue earner. Let us begin with key developments at the global level, and the story is that the oil-producing exporting countries held their 179th meeting recently and agreed on the following steps to redirect the activities of the global oil industry. They agreed that they will confirm the existing arrangements under the April agreement, where the ministers of oil and petroleum met to take steps for the industry. They subscribed to the concept of compensation by those countries who were unable to reach full conformity of 100% production in May and June, with a willingness to accommodate it in July, August, and September, in addition to the already agreed production adjustment for such months. The OPEC ministers agreed the option of extending the first phase of the production adjustment pertaining in May and June by 1 month further. They recognized that the continuity of the current agreement is contingent on them fulfilling elements 1 and 2 above. They agreed that without dissent, the full and timely implementation of the agreement remain inviolable based on the 5 key elements, and endorsed the set statement on the Declaration of Cooperation, which is annexed to this release. The meeting also called upon all major oil producers across the globe to proportionately contribute to the stabilization of the oil market, taking into consideration the substantial efforts made by OPEC and non-OPEC participating countries. OPEC has as the Secretary General Nigerian-born Dr. Mohammed Barkindo. Nigeria, on its part, reiterated its commitment to continue to collaborate with the OPEC Plus nations in the historic efforts to adjust crude oil production towards rebalancing and stabilizing the global crude oil markets for the benefit of all. The federal government, through the Federal Ministry of Petroleum and Natural Resources, affirmed its commitment alongside its OPEC Plus counterparts to extend the first phase of production adjustment of 9.7 million barrels per day by 1 month until the end of July 2020. Nigeria also subscribes to the concept of compensation by countries that are unable to attain full conformity of 100% production in May and June 2020 to the compensation for it in July, August, and September 2020. The federal government said it's in full alignment with the decision to closely monitor the market dynamics, and it is their conviction that the current gradual recovery being witnessed in the industry will be sustained. The auspices of the 11th OPEC and non-OPEC Declaration of Cooperation meeting. Nigeria also appreciated the commitment of the OPEC Plus group under the able leadership of Saudi Arabia and Russia towards ensuring the success of the historic intervention in global oil production. Let's take a look at the recent growth rate of Nigeria's GDP for first quarter 2020, released by the National Bureau of Statistics. The report showed that Nigeria grew at 1.87%. Apart from that growth of 1.87%, it also once again emphasized the fact that the oil and gas sector continues to drive the nation's economy, driving the revenue, and of course, making the need to diversify Nigeria's revenue basis a top issue for consideration. The oil and gas sector, in terms of growth, recorded a real-term growth of 5.06% year-on-year in the first quarter of 2020, indicating an increase of 6.51% points relative to the rate recorded in the corresponding quarter of 2019. However, growth decreased by minus 1.30% points when compared to the fourth quarter of 2019, which was 6.36%. Quarter on quarter, the oil sector recorded a growth rate of 11.30% in the first quarter of 2020. The oil sector contributed 9.50% to aggregate real gross domestic product in the first quarter of 2020, up from figures recorded in the corresponding period of 2019 and the preceding quarter, as the share of the non-oil economy declined. During the first quarter of 2020, an average daily oil production of 2.07 million barrels per day was recorded in the country. The production level was higher than the 1.99 million barrels per day recorded in the same quarter of 2019, by 0.08 million barrels per day, and the fourth quarter of 2019 by 0.06 million barrels per day. It is gratifying to note that in the area of legislation, the 9th National Assembly, led by Senate President Ahmed Lawan, has reiterated its commitment to reviewing and passing the Petroleum Industry Bill, which is long overdue for decades for repositioning the oil and gas sector in Nigeria. It is critical that this is reviewed and signed to attract investment into the industry. Recently, about 14 civil society organizations advocated for reforms in the downstream segment of the petroleum industry. The recommendations of these 14 civil societies are as follows: a support for the privatization of the country's 4 refineries in their present condition to avoid further revenue losses. They suggested the adoption of a transparent merit-based model for privatization, either considering the Nigerian liquefied natural gas for part privatization or an outright sale. They encouraged the government to adopt favorable fiscal terms that bring about a renewed investors' confidence and also help fast-track the proposed 29+ refineries which still have valid operating licenses. The CSO enjoined the Presidency and the Minister of State of Petroleum Resources, Department of Petroleum Resources, and the Petroleum Products Price Regulatory Agency to publicly support the recent declarations made by the Group Managing Director of the Nigerian National Petroleum Corporation on the removal of fuel subsidy through an official public statement that was made April 8, 2020, signed by the GMD in various media appearances and recent times. They also taxed the government on laying out defined processes and regulatory guidelines to support the announcement of removal of fuel subsidy. These, according to them, should be pushed forward and announced by the Presidency and the Minister of State Petroleum Resources to give the policy an official seal of affirmation to all Nigerians that this is a new phase for the country. They called on the federal government to commit to the sustainability of the no-subsidy regime by entreating it in law, either through a standalone legislation or through appropriate clauses integrated into the Petroleum Industry Bill. This will allow for the sustainability of the no-subsidy regime. They called on the government to clarify the role of the Petroleum Support Fund in the new no-subsidy regime. For them, clarity is required about how that fund is being managed, whether the over-recovery sums were deposited there and how they are expected to be spent. They also encouraged the government to transition the PPPRA and the Petroleum Equalization Fund into new roles to ensure the sustainability of the proposed non-subsidy policy. Repeal of the PPRA and the PEF Acts and transition them to efficient and competent institutions to support the reforms encapsulated in the proposed PIB, which are possible options to consider. They urge the government to prepare for a post-price regulation era by prioritizing consumer protection hands of profiteering marketers. They suggested antitrust or competition propositions using the Federal Competition and Consumer Protection Act of 2019. They encouraged the government to consider providing varied options for Nigerians in terms of transportation systems in the country when inevitably increases in price of crude oil results in the rise of the price of refined petroleum products. They suggested that the Nigerian National Petroleum Corporation, as a national oil company, should not be given any advantage, whether comparative or competitive, over other petroleum products marketers in terms of access to foreign exchange to handle their importation of products activities to create a level playing field for all players. If the NNPC must remain a player in the market, it must strive to operate under the same conditions and rules as other players in the sector, regulated only by the prevailing market forces and competition. While the conclusion of the work on the Petroleum Industry Bill is being awaited, the CSOs urged the government to take steps to delineate the roles of policy formulation, regulation and enforcement, as well as operation in the industry. They suggested that policy directions should be left under the purview of the Minister of Petroleum Resources, with the Presidency and Minister of Petroleum Resources and Minister of State for Petroleum Resources lending their support to the declaration by the Group Managing Director of NNPC to give weight and establish trust between the government and the people. Interesting recommendations from about 14 CSOs who were concerned about the need to reform the downstream sector of Nigeria's petroleum industry. Just to remind you that one of the biggest investments in Nigeria's oil and gas industry is taking shape, and except for the disruption of the COVID-19 pandemic, it was supposed to come on course for completion, but project is still in progress. The Dangoty Refinery is the single largest trained petrochemical facility deployed and built in sub-Saharan Africa, with an estimated capacity to produce 650,000 barrels of crude oil per day when it begins full operations. It has been described as a game-changer project in the industry, and policymakers, industry experts, and analysts have described it as a defining project, an investment that will aid the diversification of the Nigerian economy. The multi-billion-dollar investment will help Nigeria to save foreign exchange and create over 30,000 jobs. WebTV will continue to monitor and go around and carry out coverage of activities around this refinery project, even when it's going to be commissioned, because it's a game changer. As part of efforts to strengthen the local content segment of the oil and gas industry in Nigeria, the Minister of State for Petroleum and Natural Resources, Mr. Timi Silva, recently inaugurated the board of the Nigerian Content Development Management Board. Mr. Timi Silva, who serves as chairman of the board, charged the members to support the attainment of the Nigerian Content 10-year strategic roadmap. He stated that the accomplishing of the lofty goals of the roadmap would enable the domestication of petroleum refining, domiciliation of manufacturing of industry requirements, extraction of value from gas, and positioning Nigerian operations and service providers at the forefront of the play in the upstream, midstream, and downstream sectors of the industry. The minister, who serves as chairman of the Governing Council, with the Executive Director and CEO, Engineer Simbi Wambote, as secretary, and join other members to ensure that the targets set in the roadmap are met by supporting the ongoing initiatives and laying the foundation for the upcoming projects during the 4-year tenure of the board. The minister maintained that the target is to achieve 70% local content in the Nigerian oil and gas industry by 2027. Earlier this month, the Petroleum Products Pricing Regulatory Agency, PPPRA, announced the removal of price cap on the retail price of premium motor spirits. In a notice published on its website recently, the agency said a market-based pricing regime will now determine the price of the product. The notice was dated in March 2020. Removal of existing premium motor spirit price cap per litre. The price cap per litre in respect of premium motor spirit is removed from the commencement of these regulations. The notice was signed by Abdul Kader Saidu, PPR Executive Secretary. Speaking further, he said from the commencement of these regulations, a market-based pricing regime for premium motor spirit shall take effect. The agency shall monitor market trends and advise the NNPC and all marketing companies on the monthly guiding market-based price. The price of premium motor spirit advised by the agency shall be the guiding retail price at which the product shall be sold across the country. This statement and decision has generated a lot of debates on the role of the PPRA, which of course, as earlier stated by CSOs, should be reviewed to understand their role in the new regime. And just coming in from the stable of ProShare, Nigeria's leading financial information hub, we take you to the latest update and report that talks about the global oil markets spinning around a vortex. That is a publication from ProShare, Nigeria's leading financial information hub. It first begins with the fact that the international oil market in 2020 was disrupted by the adverse impact of COVID-19. The spread of the virus in the USA, China, Asia Pacific, Europe, and the rest of the world resulted in a fall in global oil demand. An agreement to cut oil supply by OPEC and its OPEC plus counterparts had failed to hold prices up. The impact of COVID-19 on the oil market has been punishing for oil producers, as the price of the West Texas International price and Brent had fluctuated between $27 and $37 per barrel in May 2020. This has had impact on the costs of production and has also provided a protracted oil price face-off that has lasted for shorter than previously expected as a result of America's swift intervention, which had more to do with protecting U.S. shale producers than guaranteeing price stability at the international level. Saudi Arabia and Russia have both relatively low cost of producing oil, with sizable foreign reserves of $490.5 billion and $570 billion respectively. It cost Arabians $9.9 to produce a barrel of oil, while it cost Russia $17.2. Let's look at the largest consumers of oil in 2019 from the analysis of the Chronomics report in ProShare. The United States of America, Europe, and China recorded the largest consumption of oil in 2019. According to OPEC numbers, the United States, Europe's, and China's share of consumption globally was 20.9%, 14.4%, and 13.1% respectively, according to the report. Looking further, in terms of large suppliers of crude oil in the year 2019, previous year, large suppliers, I meant to say, the United States, Russia, and Saudi Arabia recorded the largest global supply of oil in 2019. According to OPEC figures, the United States, Russia, and Saudi Arabia's share of global supply was 20%, 12.4%, and 10.6% respectively, according to this report. It speaks further that the Brent crude price at the beginning of the year was $68.6 per barrel, but the breakout of the coronavirus, which led to a fall in demand for oil, caused a sharp fall in prices. Despite the cut in oil supply, there has been a downward slide in the international price of Brent crude. Looking further at the report, it says that from the economic perspective, the dilemma framework explains the various possible outcomes between the top two players in the global oil market outside the United States. The best possible potential outcome in this whole scenario during the pandemic for oil exporters and oil-dependent nations like Nigeria, Angola, and Libya could be for both top oil producers, Saudi Arabia and Russia, to agree to a sufficiently large oil supply cutback. And looking at the price in terms of fiscal break-even oil price, the majority of Middle East and North African countries dependent on oil revenues will be adversely affected by the fall in crude oil price. According to International Monetary Fund's projections for 2020, the top 5 countries under the Middle East and North Africa platform with the highest fiscal even oil price are Iran, Bahrain, Algeria, Oman, and Libya, who all require fiscal break-even oil price of $124 per barrel, $93 per barrel, $92.3 per barrel, $85.9 per barrel, and $79 per barrel respectively for their fiscal break-even price. And in terms of the external break-even oil price from this report, according to the IMF projections for 2020, the top 5 countries under MENAP with the highest external break-even oil price are Bahrain, Algeria, Oman, Libya, Iraq, with an external break-even oil price of $77.8, $69.6, $59.4 per barrel, and $67.7 per barrel respectively. And then when we look at the gold and other commodities, it shows that investors have proven to be less reliable on it as a store of value, as gold prices have fluctuated repeatedly and unsteadily with the global sweep of the virus. This is also the impact we're seeing in the global crude oil markets, and the developments around this market will continue to monitor and look at how it impacts the activities of economies. Don't also forget that the OPEC Plus meeting, which held recently to look at how they can resolve stability in the global crude oil price, will be a major issue that will shape how the international markets will fare. Also, the US-China continued relationship and the escalation of tensions could also shape how the crude oil price would play in the second half of the year as the build-up begins. The coronavirus indeed has had its impact on the global crude oil price, And of course, Nigeria had to revise its budget benchmark from the initial $57 that it had before. We'll continue to monitor developments in the petroleum sector, and we know that this is a very critical sector, even as economists, policymakers, and even the government are working tirelessly to ensure that Nigeria diversifies its revenue base from dependency on crude oil. That will be all for this conversation today on Economy and Politics show. Don't forget, in subsequent editions, we will engage experts in the petroleum sector to look at developments and prospects for deepening a large sector that can have a wider impact on our country. Till we come your way again, we just enjoin you to watch and follow our website, www.proshenji.com, to watch our videos with our news stories and our reports. Don't forget, by 10 a.m., we have the market review, and we have interesting conversations around the financial markets and the economy. Thank you for watching. Have a nice time, and stay safe.